Good morning. We're about 3 minutes past New York Open here on the Dow 89 tick chart. Um, going to give the market about 15 minutes to settle before I start looking to enter any trades. And I really don't have a channel at this point, valid channel at this point anyway. As you can see, for the last several hours, we've been in a range. So really, nothing here at this point to look forward to as far as entries go. We are, based on the 5 and 21 EMA comparison, where we're still in a very bearish market. And if you look at the daily time frame, we have a really, at this point, so far today, we have a pretty strong bearish engulfing bar that's forming. So all indications are that we're going to see a lot of pressure to the downside again. And you can see we just broke this, looks like we just broke this range here to the downside. So um, again, this is not a valid trend channel yet. Um, if at whatever point we get a pullback and if we get a rejection off the top here with some movement back to the south, then this becomes a valid trend channel. But right now, I'm just kind of framing the market up a little bit to see how aggressively price is moving to the downside. Um, One other thing I want to show you here, if we squeeze this in a little bit. So I can't remember which, on the 1 hour, it may have been the 4 hour chart. If you go back and look, there's a small gap in price up here. You see these two dotted lines. That's the extremes of the gap. At some point, who knows if we'll make it up there today, but eventually, as price starts getting back up into this area, it's going to gravitate. It's going to be pulled towards this area. Um, uh, Price always likes to go back and fill gaps, right? So the institutional investors are going to see that happens. So as we get into this area, obviously we would probably be in a bullish market, at least on the 5 and 30 minute time frames, maybe even the 1 hour. We would be looking for longs, and there might be a possibility to use this as a longer term target for some of those entries. So just something to consider as we move throughout the next several trading days. I'm going to leave it at that for now. Pause the video, give it about 10 more minutes for things to kind of level out, and then I'll come back and silently look for entries. And once my trading morning is finished, I'll provide any commentary I feel like is necessary to explain why I entered the trades that I entered. Hope everybody has a great day. So far, it's about 9:40 a.m. Eastern Time. So far, the bottom of this larger bearish trend channel that I drew, is price seems to be respecting this area. So possible entry here, um, a better entry would be up here somewhere. I'm not sure what happened to my. Sometimes this thing is kind of fickle. This trend line tool just disappeared on me. So let's get it back and see how our fib lines up. Yeah, so we have a nice confluence right here. The 38 fib, a big round number, and the 21 EMA. If we make it there, might be good for a scalp. Still, I like this area better for a bounce from right here, but we'll give it a few and see what happens. That's 13 points in two trades over the course of 1708 to 1728. So in 20 minutes, 13 points. And you can make a living off that. 13 points a day very easily. So you see the power in um, wick scalping, as long as you have, again, good confluence, like we had for both of these. Very seldom is it does happen, um, but very seldom, if you have a good supplier demand area, um, you know, prior little resistance or support areas, the 21 fib, the trend channel lines, um, and there might be other things. Maybe you know harmonics or something like that. But as long as you have good confluence with two to three of those, very seldom is price just going to come up to that area and just barrel right through it and keep going. It does happen, and when that happens, I have a 20-point loss, which again is kind of painful. But after 2 days trading this week, um, I can take two losses now and still be profitable. So again, it's all in the profitability ratio. Being in that 80 to 90% range. So the best way to practice this is on a live account using micro lots, zero point 0.01, and you're not going to make any money doing that. However, you're not going to lose any money either. And but it's gonna teach you in a real live environment just how powerful this can be, and it makes the math real easy, right? So if you're trading zero point 0.01 and you have a trade where you make who knows, I can't remember. Um, let's just say $1 to make it easy. It's not going to be that much on a scalp anyway. But if it's $1, multiply that times 100, because a full lot would be 100 times zero point 0.01, and you would have made $100 on that trade at a full lot. So you build your confidence by trading live with us with a small lot size, and just getting in the habit of drawing the supply and demand areas, the trend channels, how to set the fibs, um, and then the big round numbers. And you've got a great trading plan that works time and again with zero indicators, depending on how you look at it, right? Again, you could argue the moving average is an indicator of sorts, but you're not relying on some kind of signal to tell you when to enter or exit a trade. You're relying solely on price action and reading the structure of the chart. Here, I wanted to mention, again, we're obviously in a downtrend. We came down, we made a low, a nice structure low. We had one push up, we had a second push up, and a nice pullback, and then we had a third push up. And now what's happened? Price has reversed and it's broken all of these little lows here. So I fully expect price to go below this demand or supply area, whichever you want to call it. It's going to be supply for me, because what I expect is price to break below, come back and retest. So we've got this supply area, we've got a big round number, we've got the trend channel right here. We will probably have a fib level of some sort. So this is going to be another good trade to get into if things set up just right. So I'm going to pause the video to keep it from getting too long, and I'll come back whenever I see another trade setting up. One thing I want to point out here is this could set up to be a nice, more of a structure target trade when we get a pullback here. If we do get back up this high, it, the reason why, you look left and you see there's nothing, there's no structure anywhere here. So all the way over here, there's no structure. I mean, we haven't been in this area price wise for quite some time. So in other words, there's really no resistance to keep price, from a technical perspective, which is how I trade, to keep price from continuing to barrel down, right? So we get a nice pullback. If we got a pullback at this point, a good structure target would be right here where the pullback started, because that would be the next most likely area that price would find, a little resistance again, to going further south. So again, we'll just watch this and see how it plays out. All right, so I'm in and probably a little bit too early, um, but reduced risk versus a normal trade, so allows me to open up my stop loss a little more just above this little area of structure here. Um, and then I'm looking to take profit down at the bottom of this area here. I may get out early. We'll just see how it goes. This is going to be nice if this closes as an engulfing bar, because that's just validation that price is more likely to head further south. And that's about as strong of an engulfing bar as you'll see. Yep, on a 89 tick chart. So not 100% certainty, as again nothing in trading is, but that tells you relative to the time frame or volume here that sellers are back in control after this little pullback. And at the same time, this is a nice bullish bar. So the struggle continues. All right, so I just closed out 2/3 of my position, and then I'm going to move to break even here. And usually I get stopped out on these. Yep, that's what happens. So, but didn't lose anything. So, and I fully expect that price is going to come all the way back down here before this area where my stop loss was is going to be hit. But again, don't be greedy. When you have a 80 to 90% success rate on the 6-point scalps, there's really no need to be super greedy, and it leads you into making bad decisions later. So I would not have made it to my profit target. This, let's see, let's look at this and see. That is a lower, yeah, this lower trend channel line held as it should to some degree, and I sent price back up. Now so far it hasn't reached my stop level, but right now it's looking more and more likely that it will hit this area before it reverses to hit my original take profit. So um, my scalp out at 15 points looks like a great decision so far. Whenever you see a strong area like this big round number, this 21 EMA, holding price, rejecting it like this, that's a good indication that you could see a temporary move, um, you know, back to the plus side. And we're rejecting right at the 38 fib. So, and with a super strong down move like this, where I mean you didn't really have the only real pullback you had here, um, which reminds me, I don't think I explained that. So, for me, based on how I learned, a valid pullback has to, in a downtrend, a valid pullback has to have two lower highs on either side of it. So you can see this one here has two lower highs, two lower highs. However, it's not much of a pullback, right? I mean, we didn't even, if we put a fib on this, we probably didn't even get a 10 to 20% pullback. So I don't know that I really would validate that one. So in other words, really, there's no, you could say, it's kind of hard to see here. Yeah, we have two lower highs on either side of this one, so you could say that's a valid pullback as well. But again, it's not much of a pullback, and then price continues down. So for me, this is just one solid, just locomotive type move down to the downside. When you have a strong move like that, you typically can expect that when you do start getting a pullback, it's not going to be a very strong pullback at all. And right now, um, that's holding true. A pullback to the 38 is, um, not what you would consider a super strong fight put up by the Bulls. Up in this area, 61 to 78 is where, if it were a weaker downtrend, is probably where you would expect to see the pullback come to. So, if the three moves happens as it typically does, you have one, two. So we should still expect another new high up here somewhere to make at least a third move up. Doesn't mean it's going to happen, but typically 3 to 5 moves to the upside or downside before you have a reversal. So there's still a very good possibility that this is hit. But let's look at one more thing. So I have another video on the channel that talks about using the 38.2 fib for your trailing stop whenever you're trailing a trade. So and that would be of the most recent leg once you enter the most recent valid price leg. Once you enter a trade. So and it just so happens that look where my stop was when you turn the fib on, right above the 38. And I placed it based on this area of structure right here, right? This little bitty pullback, um, you know, 2 or 3 ticks above that. So if you're a swing trader, and let's see, man, it's so close. Yep. So scalping out was a good move because I would have taken a nice loss there. Um, but at any rate, something else I picked up, just like everything else I'm sharing with you for the most part, I picked up from another trader over the years, and this works out pretty well if you're a swing trader and you like to trail those trades. So, all right, so again, let's let things settle here and see what happens with this pullback, and I might look to get into one more trade before shutting it down here. It's about 45 minutes till noon on the East Coast, New York time, so a little bit of time left to look for maybe one more trade. And where did price go before it started struggling? Right to this little area here where you have all this congestion, where all the buyers came back in on these little bitty swings here. So this right here at the 50% Fibonacci, coupled with this, could have been a nice scalp. You can see that we easily would have had 6 points there if we entered properly, maybe a little bit more. So we have our third push up now, 1, 2, and 3. It remains to be seen whether or not there will be a fourth. If there is, I might look to get an entry in here somewhere. We've got the 78 fib, possible supply area right here based on this little structure area. The big round number in close proximity, the upper trend channel line here. So a lot of good reasons to enter a trade. We'll just have to see how it plays out here. It's also possible that we just get a double top right here and price barrels back to the downside. come in. Let's see what happens here. Come on, Bears, get in there. Fourth push to the upside, so a reversal is very likely. Doesn't mean a scalp will be successful. Well, the pucker factor is getting pretty high here. And taken out. So the first loss in 2 days, and we're about 30 minutes from noon here on the East Coast in the U.S. Typically, I'll trade till 2 losses, but being so close to noon, I am going to shut it down for the day. So hope you found some value in this video. You know, some things you can piece together to form your own trading system. But I highly encourage you. I think there is some value in indicators. I probably wouldn't have made it to this method without indicators, especially. I think I mentioned it yesterday, Agamat. But there's a free indicator that is based on called, I believe, 3-level ZZ semaphore out there somewhere, and it does the same exact thing. It identifies the levels for you, the 3, 4, 5 level moves for you. So that was very instrumental in me learning how to read structure and understand where swings were going to take place, and then just knowing how to add in the levels and all, made all the difference in the world. So hope everybody has a blessed day. We will see you all again tomorrow.